Today we're going to be talking about earned income versus passive income. What is earned income? Earned income is simply income that you receive for trading your time for money. You're working for someone, or you could be working for yourself in your own business. Passive income is when you have cash flow coming in that you don't have to work for. You set it up once and it continues paying you money month after month after month without you having to trade your time in order to earn that cash flow or that money. Let me walk you through a quick scenario to get you to a point where perhaps this earned income thing will make a little bit more sense. So for instance, if my target was $6,000 a month net, but here's my problem. I'm only making $5,000 a month gross. So how do I get myself to the point where I'm making net $6,000 a month? So I'm trading my time for this $5,000 per month. Typically, the rule of thumb is you pay yourself 10%. But here's the deal. Paying yourself 10% is not going to get you to that passive income number you need to be at, right? For my situation, I had to pay myself more than the 10%. I had to pay myself 40%. So 40% of my $5,000 monthly income is $2,000. The next in line to get paid is the IRS. Now the IRS is going to want 30%. When you factor in federal taxes, Social Security taxes, all these taxes you got to pay, it's going to be about 30% of that $5,000. So that's $1,500. And what I have left to pay my bills and to live on is $1,500. I'm at $1,500 net. That's a long ways from my $6,000 net I want to be at, right? So let's keep moving. I'm doing well. I'm trading time for money. In 2 years, I doubled my salary. Now I'm making $10,000 a month. First thing I do, I pay myself first 40% of that $10,000, which is about $4,000 a month. 30% has to go to Uncle Sam again. Got to pay Uncle Sam, no way around that. So $3,000 a month goes to Uncle Sam. What's left over? $3,000. So now I got, I moved up, I'm making $10,000 a month. I do the things I need to do. Now I got $3,000 to take care of my bills, take care of my family, pay for my car, those types of things. So now it's 5 years. I've got my salary up to $20,000 per month. I pay myself first, which is 40%. So that's $8,000 right off the bat. I pay myself first, and I'm storing that money to be able to invest down the road. And we'll talk about that in a second. So I pay myself the $8,000. I store it away for future investment. Then I got to pay Uncle Sam. Now that I'm making $20,000 a month, guess what? Uncle Sam wants a little bit more. 30% ain't going to get it anymore. Now, since I'm making more money, I'm in a higher tax bracket. Now Uncle Sam wants 40%. So I pay my $8,000 to myself first because that's 40% of my $20,000. And then the next 40% goes to Uncle Sam, which is another $8,000. So of that $20,000, what's left? $4,000. That's all's left. So I got $4,000 to be able to take care of my family, pay my bills, etc. Although I'm making $20,000 a month, based on the way I'm saving and the way I have to pay my taxes because I'm making more money, I only got about $4,000 a month left. So then I have another 2 years that are extremely well. I'm trading time for money. I'm doing fantastic. Now I'm making $30,000 a month. So at $30,000 a month, I pay myself first. That's $12,000 right off the bat because that's 40% of $30,000. I'm still in that 40% tax bracket, so I got to pay Uncle Sam his $12,000 as well. So I pay my $12,000 for me first, which is 40% right off the top. I pay Uncle Sam 40%, which is $12,000. That leaves me a net $6,000 per month. The only problem with that is, even though I hit my target, the only problem with that is the only way I get that $6,000 net every month is, guess what? I got to trade time for dollars. So that's earned income, guys. Although my earned income kept going up and I was doing well, I met my target of $6,000 net per month. The problem is, if I don't show up for work the next day, I'm not going to get that net $6,000 the following month. So that's earned income. Now let's talk about passive income. How do we create this passive income thing? Let's go back to the illustration where we talked about how over the years, my income increased from $5,000 to $30,000. Remember that pay yourself first, that 40% that I was paying myself first all through these years, and I was taking that savings and I was storing it away to be able to invest in something? That's where the passive income comes in. So I'm going to take that cash over the years that I was paying myself first, that 40%, and I'm going to start investing that cash into income producing investments. Let's use real estate. I'm going to buy single family homes. I might buy an apartment complex. I may buy a commercial building. And here's what I'm going to be doing, and here's what I'm going to be looking for. Number one, I can't lose that money. So anything I take my money out of storage or out of savings and invest it in, I can't lose. So I got to be crystal clear that it's going to be an investment that's going to be around, and it's going to be able to throw off income for me in the future in the form of passive income. And the way I've done that in the past, guys, to make sure, now nothing's guaranteed, but to make sure I lower my risk of losing my money that I'm investing, I make sure I invest in real estate in the right market, in the right area. It has all the right characteristics. And I've been pretty good at doing that over the years. So I would take that money that I put in storage over the years, I'd invest it in the real estate that's going to produce income for me. See, I set it up once. I bought the real estate. I put a tenant in it. So it's done. All I got to do is sit back, and every month I'm going to get income that'll be coming in from that rental property, whether I go to that property or not. It's just going to show up. That's how you start creating this passive income. Other ways you can create passive income is taking that money out of storage and investing it into the stock market, investing it into mutual funds, investing it into exchange traded funds, just putting together a really good balanced portfolio of investments that you can put that money into and feel confident over the years it will throw off income for you down the road in the form of dividends or interest earned. So things like that. Those are two good examples of how to create passive income. But the way you create that passive income is one, you got to figure out earned income first. You're going to have to earn money, be disciplined, and that discipline means you're going to have to pay yourself first. You're going to have to pay Uncle Sam. And then what's left over until you can continue to earn more income, you're going to have to get really good at delayed gratification. I did it for years, guys. I just got to the point where even though my salary continued to increase every year or two, I kept my living standards at the same level. So as my income increased, I just continued to delay gratification, took care of the basics: shelter, food, transportation, the occasional vacation, but nothing extravagant. I know a lot of you guys out there don't have $5,000 a month in gross income. Some of you guys are making $50,000 a month in gross income. Here's the kicker though. What are you doing with it? Are you paying yourself 40% right off the top and storing that money in a savings account or somewhere safe until you can take it and invest it into an income producing investment or asset? That's the key. You know, are you living a lifestyle where at the end of the month, although you're making all this money, you got nothing to show for it. You got to get disciplined. This passive income thing is where your 1% of the world's population resides. These folks understand the concept of setting something up once and not having to touch it again, and it continues to pay them income every single year. That's passive income, guys. So they don't have to trade time for money like I did for a lot of years through my earned income. But I understood I could get to passive income if I had a plan in place that would allow me to do that. If you have questions, drop them down in the comments. If you're stopping by the channel for the first time, please consider subscribing, share the video, and give me a thumbs up. It helps the channel and it helps me too. Thoughts become things. If you can see it in your mind, you can hold it in your hands. Keep chasing your greatness, and I'll catch you on the next video. Peace.
If you want 2 free stocks, click on the link in the description box of the video, and Webull is going to give you 2 free stocks when you open up a Webull brokerage account, deposit at least $100 in that brokerage account. Guys, you're going to get 2 free stocks, and they're going to be valued up to $1,850. So if you want that free money, click on that Webull link, open up your new brokerage account today. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.